Hello and welcome to the channel, where we dive deep into the fascinating world of hard-to-borrow stocks and potential short squeezes. Today, we're putting a specific company under the microscope, CCTG Technology International Holdings Limited, trading under the ticker CCTG. We'll explore why this stock has landed on our hard-to-borrow screener and what the numbers might tell us. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show CCTG logo/chart. Let's talk about CCTG Technology International Holdings Limited. This company operates in the industrial sector, specifically electrical equipment and parts. With a market cap of approximately $3 million, CCTG designs, manufactures, and sells interconnect products across Europe, Asia, the Americas, and internationally. These are crucial components for various industries, including original equipment manufacturers. In terms of recent price action, CCTG has been quite volatile. Today, it's up a notable plus 13.14%, but over the last 5 days, it's actually down minus 13.2%. However, stretching back 30 days, CCTG has seen a significant gain of plus 66.67%. What's cost to borrow and why it matters? Before we get into the specifics of CCTG, let's quickly explain what cost to borrow means and why it's so important in the world of short selling. When you short a stock, you borrow shares from a broker and sell them, hoping to buy them back later at a low price to profit from the difference. The broker, in turn, has to source those shares. The cost to borrow, or CTB, is the annualized fee you pay to borrow those shares. It's essentially an interest rate. When a stock becomes hard to borrow, it means there's high demand from short sellers and limited supply of shares available to lend. This scarcity drives up the CTB fee, often dramatically, sometimes exceeding 100% annually. Why this stock is hard to borrow right now? Highlight CTB number. Now let's apply that to CCTG. CCTG Technology International Holdings Limited has appeared prominently on our hard-to-borrow screener for a very specific reason. Its annualized cost-to-borrow fee currently stands at an astounding 614.6%. Think about that, over 600% per year just to hold a short position. What's even more interesting is the momentum. The CTB fee has jumped plus 22 percentage points over just the last 5 trading days, indicating rapidly increasing demand or shrinking supply. Our data shows there are only 20,000 shares currently available to borrow for CCTG. When you consider the estimated float for CCTG is around 3.0 million shares, 20,000 shares is a tiny fraction. This extreme scarcity and surging borrow cost are precisely what define a hard-to-borrow situation. Our internal composite squeeze score for CCTG, which combines factors like CTB level, borrow momentum, supply, float, and technicals, currently sits at 40.2 out of 100. While this is a notable score, it's crucial to remember that a high cost to borrow does not guarantee a squeeze. It can also signal that short sellers have very strong conviction and are willing to pay a premium to maintain their bearish bets. Squeeze mechanics explained. So, how does a short squeeze work? It all starts when short sellers borrow shares and sell them. If the stock price then begins to rise, these short sellers face increasing losses. If the CTB fees also climb rapidly, the combined pressure from rising prices and high fees can become unbearable. This forces short sellers to cover their positions, meaning they have to buy back the shares they initially sold to return them to the lender. This sudden wave of buying activity, often intensified by panic among short sellers, can create a powerful upward price spiral, which is what we call a short squeeze. The shrinking supply of borrowable shares, as seen with CCTG, can exacerbate this by making it harder and more expensive to maintain short positions, thus accelerating the covering process. Dilution risk check. An important factor to consider in any potential squeeze candidate is dilution risk. Dilution occurs when a company issues new shares, which increases the total number of shares outstanding and can reduce the value of existing shares. Even if a stock is a high cost to borrow and appears ripe for a squeeze, significant new share offerings often seen in SEC filings like SMINUS-1, SMINUS-3, or 424B can flood the market with supply. This additional supply can completely offset or even negate the upward pressure from short covering, effectively killing a squeeze thesis. In the case of CCTG Technology International Holdings Limited, our check found no recent dilutive SEC filings in the last 90 days, which is a positive sign for any potential squeeze scenario. Additionally, we found no recent reverse split for CCTG in our look-back window, another factor that can sometimes complicate short squeeze dynamics. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. True CCTG chart with volume. Given CCTG's extreme cost to borrow and low share availability, what should we watch for? While CCTG is up plus 13.14% today, its trading volume tells an interesting story. Today's volume for CCTG is 158,000 shares. This is drastically different from its 30-day average volume of 10,971,610 shares. This means today's volume is negligible compared to its recent average, registering as Xerox average relative volume. This incredibly low volume, despite the high CTB, could mean that while it's expensive to borrow, there isn't significant trading activity pushing the price right now. For a true short squeeze to ignite, we would typically look for a sharp increase in buying volume coinciding with rising prices, forcing shorts to cover. The current low volume could be a mixed signal, suggesting either low liquidity or that the prior high average volume was due to a few anomaly days. Monitor CCTG's price action and especially its volume closely. If the price starts to climb rapidly on significantly increased volume, it could indicate short covering is beginning. So, there you have it, CCTG Technology International Holdings Limited, CCTG, with its eye-popping 614.6% cost to borrow and extremely limited borrowable shares. While these metrics make it a standout on our hard-to-borrow screener, the low current volume against a high 30-day average presents a unique dynamic. Remember, a high cost to borrow signals strong conviction from short sellers, not a guaranteed squeeze. Always conduct your own thorough due diligence. If you found this analysis helpful, please hit the like button, subscribe to the channel for more deep dives into hard-to-borrow stocks, and let us know your thoughts on CCTG in the comments below.